Bitcoin stuck in a new low in the very low $26,000 range, and that is exactly where we've been staying. We've actually fallen down here again after getting all of these bearish rejections. I'm still very annoyed about it because, like I told you guys, I actually had my entry for Bitcoin to go short right here. So that was actually literally just $100 above the actual high. I would have been in a short position, but here we are anyway, and we're now consolidating at the lows, which is a very strong indication of the market moving even lower. And I want to cover these possibilities with you in this YouTube video, including like where I think Bitcoin might go. Now, this analysis isn't going to be complete until we look at the dollar, and the dollar has just completely shot past the first area of resistance that I told you. This is actually the second area of resistance I told you we had. The first one I said was here, second was here, and the third one I said was up here. So if we're going up here, and that's what it looks like we're doing right now, we have a very long way that we can go, and that can definitely result in some more blood for Bitcoin. But what's really well worth noting, and by the way, we're out here in Japan, fucking back here again, that is super cool. What's really worth noting with Bitcoin and its price action is that even though the dollar has actually just shot up, and I mean, let's just take a second to understand and appreciate how much it's moved up. I mean, within 3 weeks it's up by 3%. That's pretty fast. I mean, the last time that the dollar actually gained like 3%, took a very similar time frame, and it did go all the way up to this area of resistance. So it certainly looks like we could be repeating that, potentially looking to get that double top. But of course, the bulls are also going to be looking to see that high broken so that we can come up here. I definitely do not think that's going to happen, but of course I will stay prepared just in case. The thing about this market is that given how high the dollar has gone, Bitcoin hasn't actually seen the same thing. Bitcoin typically is going to get smacked down when the dollar is really strong, but lately what we've seen is the dollar has just gained so much strength, and Bitcoin has obviously gotten weaker. We are down in the, kind of low 26k region, but we're still at 26k. You know what I mean? Like, with the dollar breaking its highs and setting new highs within this kind of short-term trend, and Bitcoin just basically nearly holding on to the lows, right? I mean, if we just kind of take a look at where Bitcoin actually is, like the low, the important line is this. What am I doing, guys? Sorry. The important line is this yellow line right here, and I mean, we're not that far away from it. If we measure the drop, we're not even 1.5% below this support area. So by that measure, Bitcoin is holding up pretty strong. The S&P 500 is also doing okay. I mean, we did get smacked down a little bit, but we're still holding very strong in this range. And so to me, it is looking like there could definitely be a lot more strength for the dollar, and in turn a little bit more weakness for the S&P 500, a little bit more weakness for gold, a little bit more weakness for Bitcoin. But even with that picture, all I'm seeing here, and this is a really big deal, is like, as part of any rally, as part of any movement in any market, you're going to have corrections. And we know that the dollar has been getting weaker for quite some time now. In fact, I mean, it's been getting weaker for, a year or so, since like this high up here. What was this? This was, September 22. So nearly a year now. We're coming up to it. And it's actually been trending much longer than that. In a downtrend, if we actually zoom out to the monthly time frame, you can see going back to the 70s. To the 80s. We've just been seeing a declining dollar across time here. So if you're anticipating that to continue, you're still going to have to expect corrections, right? And that's the thing that I think is really important. I think that we've seen a really nice rally for Bitcoin. We've seen a really nice rally for the S&P 500, for gold, so on and so forth. And now we're just seeing a longer term correction. That's all I think we're in. And, I'm saying this with a really kind of reasonable, calm, collected tone with you guys, because that's all I think this market is doing. I think a lot of people are getting shaken out by the intraday volatility and so on. And if we actually go ahead and take a look at the 4Flies dashboard and refresh what we've got here, we've got a reading of 51, not great, but certainly not horrible, and long and short ratios that are through the fucking roof. Absolutely insane, ladies and gents. 72% long compared to shorts. There are 2.61 long positions for every short position for Binance retail traders. I can't think of something more bearish than this, guys. And the thing is if we look at the price action, which I haven't actually spoken about quite a lot in this YouTube video so far, but I will speak about a lot later on. Just make sure you do smash up the likes if you're excited for that. What we are doing now is we've fallen down to a previous low, and we're consolidating here. This is almost like, we have a prisoner. Here's a horrible analogy for you guys. Wow, I've been watching too much Game of Thrones lately. I actually just watched the rerun, and now I'm on House of the Dragon, so no spoilers, but I love Game of Thrones, obviously the pinnacle of TV, and here we are. We've got, no spoilers, I won't give you one, don't worry. We've got a prisoner that's about to be executed, and then, he kind of pleads his case. He comes back up for life for a little bit longer, but now he's back on the chopping block, and the person who's about to swing the sword is just asking, do you have any last words? That's basically what this is. This is, do you have any last words? If we could put this into a movie quote, That's where Bitcoin is right now. The death is inevitable. The drop off the cliff down to 25K or whatever it may be, it's not inevitable, I shouldn't have said that, but it looks quite likely right now, and we're doing the classic thing that we always do, right? We set our low, we come bounce up, and we return to it, and the next time we return to it, we're sideways flat for a little bit, and then we kind of just roll off and fall down. It happens so often. I can actually find you guys many examples right here. You know, there's a similar example over here. In this case, we did consolidate here, we came up, next time we consolidated again, and that was what preceded the drop. So usually we wouldn't get this consolidation here, but you guys remember how weird that price action was. And there's so many more examples of it. We do it to the upside as well, right? So over here, for example, we reach this high. The next time we're consolidating at the high, and then we're breaking up. So you know, this is a universal thing for these markets. You know, with the body language, this is the body language of the market, right? The body language of the market is that you're gonna have the market come down to test the low, find some support briefly, and then test the low again, but this time with more weakness. Why is it more weakness? Because the last time we bounced up really quickly. On this occasion here with this candle, it was a super quick wick, and the market just, I mean, you know, within the same hour, the market was already up by 4%. We look at the same wick here, and within the same hour, the market's up by like 1% or whatever it was. It's just not the same. We just don't have the same strength. We didn't hang around here for long. You know, on this occasion here, to get a bounce, it took us like 2 hours, and to actually get out of this range, it took us 18. We've already been here for over a full day, and we still haven't got a bounce. So we are going slower. Like, price action wise, this market is weaker than where it was before. But back to the original point I was making, you know, with all of these rallies that we've been seeing for you know, this longer term trend, guys, we have seen a really nice kind of bullish environment for our you know, more speculative investments right now, which is absolutely amazing, right? Because when we were down here, when we were even rallying up here, nobody believed what was happening. Now we're in a little bit of a pullback, and we have an extremely irrationally exuberant retail market right now. You know, and so, you know, it does to me look like we need to cool off a little bit more and pull back a little bit more. But here's the thing that's really important, is that in any trend with the dollar and with the S&P 500 and so on, you're going to have corrections, right? This is what I'm coming back to what I was saying earlier. You're going to have these corrections, and the thing about these corrections is, you know, ideally you don't want them to be too heavy, right? I mean, you don't want the correction to be like, you know, when Bitcoin topped out over here. You know, if you're forming a correction, ideally, you want your correction to look like this. You want your correction to look like this. You want your correction to look like these, or like these, or like these, you know? But what you don't want your correction to look like is like this. You don't want your correction to look like a steep drop off that happens really, really quickly. So what we're in right now is one of these slower corrections, and it's just, I mean, it looks so obvious, right? We move up, pull back, move up, pull back, move up, pull back, right? This is the staircase to heaven that everyone dreams about. This is what you guys are getting your lotion out for, and I'm completely there with you, ladies and gents, ladies as well, because this is a very, very exciting market, right? I mean, this is exactly the kind of environment that you want. This is the thing that I can't shake, and you know, it's not just because I'm in a long position, but obviously I have to admit, like, this is probably going to have some weighing on my analysis, and I'm not going to be blind to that, you know, and pretend that I'm a superior fucking trader, because I'm not. I'm just a normal person. But at the end of the day, what's really important to keep in mind is when we've got these long-term trends which are correcting, if our corrections are soft, if our corrections are easy, if our corrections are, as opposed to you know, something like this where within, you know, 10-11 days we halve in value, minus 43%, if instead of that we're looking at a 40-day 16% drop, I mean, it's a really soft correction, guys. Like, it's just not that bad, right? I mean, the dollar is at astronomically high levels compared to where it was just 3 weeks ago. We couldn't even imagine the dollar getting up here, right? If we ran a poll about the dollar breaking this resistance level, most people would not anticipate that. Most people have been very bearish on the dollar. Obviously, it's a bandwagon that everybody wants to jump on, shitting on the dollar. I don't know why it's so fashionable to say that an entire fucking country's currency should collapse. We don't say that about Venezuela or Zimbabwe or Turkey or Lebanon. I don't know why it's okay to say it for America, but anyway, here we are with a bunch of, you know, hypocritical views in the crypto markets. Anything to let our investments go up, right? Even if the economy in the world crashes. But anyway, that's neither here nor there. Thankfully, we don't discuss stupid ideas like that. We're only interested in the price action. The price action is very straightforward, guys. We've moved up massively. We've seen so much strength for the dollar, which should have translated to so much weakness for traditional finance markets and Bitcoin and so on, that we did not get. We did not actually get that happening. So to me, this actually looks like, well, we had a bearish event. It's the dollar moving up. and we've responded to it with much more strength than I thought we had. So what does that do for me with my long-term outlook? Well, it's just making me feel even more safe and secure with my outlook. My outlook has been very clear for a long time. 30k is resistance, 25k is support, but overall I think we're still moving up. Whether we clear 35k without coming all the way down here, or like if we just do it like this, or if we tag support first, I still think that right now this market is positioned to continue trading up. We're still not doing anything catastrophic here, ladies and gents, and for that reason I just can't be too worried about what I'm seeing in this market. It is definitely something which, longer term, the fact that we're just not responding with this much with so much weakness is a really strong sign to me. I do want to highlight this to you guys. If you are interested in trading these markets, you have some amazing opportunities to do so with the links in the description down below. BingX is an exchange that you can use without KYC. That means no pictures of yourself and no pictures of your ID. If you're a little bit more privacy minded, you're going to like that, and you can trade any market you like in crypto. But also you can buy and sell stocks like Apple, Tesla, the S&P 500, gold, oil. There's a lot of options available to you guys with a lot of flexibility, so definitely check it out. It's a very cool combination of features here. And Bybit, this is going to be my platform, has been for years. They're going to be giving you up to $30,000 in free trading money that you can deploy into the market, and any profits that you generate with their free money, those profits are yours to withdraw. That is really, really well worth checking out. Prime XBT for more traditional finance. OKX for another 30k potentially in bonuses. Well worth checking out. And Bitflex also doesn't require KYC. But let's move back to the video here and talk a little bit about some of our looming problems, because these are going to keep getting worse. Our Ichimoku cloud is moving down, and this is the thing that I think Bitcoin is in right now, is if we are able to muster a bit of a rally back up. I did cover this in yesterday's video. I would have to expect that Bitcoin might actually get rejected at some of these resistance areas. And the reason I'm saying that is because as we're dropping down, our resistance levels are moving down as well. You can see the Ichimoku cloud very clearly continues to move down here. And to me, this means that if we do kind of rally up here in the next few days, there's going to be another confluence of resistance. There's going to be resistance from the Ichimoku cloud. There's going to be resistance from this line, which already offered Bitcoin support, and maybe even resistance in the past. Let's zoom out. Not really seeing any resistance here, but a lot of support. So it is very reasonable to expect resistance here now that we have kind of swept our lows. And if we zoom out and look at this on the daily time frame, we also very, very nearly have daily EMA resistance. Now, it was actually this very same combination that rejected Bitcoin previously, and it was the same reason that I wanted to enter a short position up here. I would have been in a 40% profit right now, I think, because I'm pretty sure I selected 10x leverage, so I'm pretty annoyed about that. But I am still interested in entering another position if it is safe, and that is a really big if. But as usual, VIP is going to be fully updated on how that goes. A lot of the time, this is going to be how it is, and that's completely fine, right? I don't mind if I plan to enter a trade and the trade would have been really profitable, but my entry just wasn't aggressive enough. If that's the problem, that's a really good problem to have. A lot of people have way worse problems than that as traders, and for me, it's not an issue for me if I just missed out on a trade, because it means that I didn't lose money, and that's the most important thing, guys. When you lose money, you're rolling the clock back, you're setting your progress back, and that costs you way more than just losing your money, because you could actually be compounding forward. But because this is the thing that most people don't understand, and if you're in VIP, it's a harsh reality, but that's why it's going to be the first thing I tell you when you walk through that fucking door, is that there's no way to make money quickly in these markets. The only way that you make money quickly is by putting one foot in front of another with the right process and the right system, and just focusing on that process, right? And it's going to be slow. You're going to have that kind of slow grind up. You will get the home runs, right? I mean, hopefully you will. I don't know. I can't guarantee that for sure. I definitely get the home runs, as well, and I want to get them. I'm looking for them. I'm ready to trade them if they come. But what we're looking for more than that is that stable growth, because when you're just kind of searching for the home runs only, you're going to fuck up a lot. You're going to have a total capital loss many, many times. You're going to have to kind of refund your account if you keep going for those kind of gains, because they're dangerous to chase. But if you're just going for the easy 30%, 40%, 50%, these are really easy gains to produce if you're using a little bit of leverage, then actually your life becomes a lot easier. And that's kind of my approach as a trader. That's what I'd encourage everybody to at least learn about. I don't care if you trade it or whatnot, that's not my business, but at least learn about it, study it. These kind of approaches are what make you money, and it's really important to keep in mind, because if you kind of consider how it works in real estate, everybody's aiming for their stable 8% annual growth on their investment, but 8% in and of itself is not impressive, right? Nobody actually cares about a $1 million house turning into 1,080,000, but what we do care about is when that $1 million house becomes a $2 million house because you've been collecting 8% every year for 10, 15, 25 years, you know, and now you're experiencing the compound effect of those profits. That's where the power is, right? It's not about the individual 8%, but it's about getting the 8% consistently over every year. Now, our goal as traders is to get that 8% within an hour, within a day, within a week, instead of waiting an entire year, so that we can just do it faster. When you approach it from that perspective, you're going to make way less losses, and you're going to be booking your winners more consistently, and it just generally has worked out much better for me. So it is definitely something that I'd love for you guys to learn about. And of course, I'm teaching all about it right here on this channel and so on. But this is an important thing to keep in mind because, like I said, it's the very same confluence that actually caused problems for Bitcoin in the past. The EMA ribbon coupled with the Ichimoku cloud coupled with the VPVR coupled with the horizontal resistance was a nasty combination for Bitcoin here. And we have the same factors that are still going to be weighing down on Bitcoin. The EMA ribbon is probably going to keep moving down. The Ichimoku cloud is already moving down. VPVR still is going to be offering resistance in this range, maybe even more resistance now that we've actually traded sideways here for a little bit. Let's actually take a look at this and zoom in just a bit more so we can get a better view of what the VPVR is actually trying to show us. And you can see all these big spikes here. I mean, you've got you know, a significant spike of resistance here, another one here, and another one up here. So basically, until Bitcoin is able to clear $28,000 and really to get above this yellow line, because that's what I've been saying, this is the line that will make Bitcoin bullish again, in my view, is 28.6. Until we get there, the short-term view is not bullish. Long-term view is still very bullish. A lot of people don't seem to understand this, and that doesn't matter to me because you guys aren't who I make the YouTube channel for. But for those of you that are a little bit more sensible, but for some reason just haven't been able to get it yet, you know, my short-term view can and a lot of the time will be different to my long-term view because the picture is just different, right? I mean, it's important to keep this in mind. If we actually look at the chart back here, for example, and understand what the chart was showing us, we had a really nice clear uptrend coming off this low. Even up to where we are right now, we're still in a very clear long-term uptrend right here, or mid-term uptrend. But within these uptrends, we have had short-term downtrends. So it's possible that you can have a long-term bullish market with a short-term bear trend. And in between that, we can have even shorter term bull trends, right? It's all just, you know, in and of itself. It's like those Russian dolls. There's just one after another that keeps coming out, and that it just, you know, I mean, you can zoom in onto the 1 second time frame, and you'll have a trend for that too, you know, and it's always going to be different on different time frames. This should not be a hard concept for you guys to understand, and I don't think it is for most of you. But if it is a hard concept for any of you to understand, this is where you pause the video, you go back to learning a lot about TA because you clearly don't know anywhere near enough. And the thing you need to understand is that, like, when you enter these markets, you think that you can just fucking sit on your phone and press a few buttons and make money. Your competition knows what the fuck they're doing, ladies and gents. Your competition knows exactly where they're putting their money. They know why they're going long. They know why they're going short. They know what you're probably thinking. They've got access to the to the best data available and so on. And you think you can just sit there on your fucking phone while you're just kind of like, you know, half paying attention to it, half watching YouTube, you know, FOMOing into whatever shitcoin your Twitter following, your Twitter influencers that you follow are tweeting about. No, that's not how it works, right? It's a brutal reality, and you can choose to face it if you wish. It will make you a much better trader, and if you don't want to face it, then you'll stay where you are. But that's a reality of the market right here, and, you know, sticking to these realities, we're actually bouncing up right now. You know, these resistance levels, look at that. This is nice. This is nice. It's happening right now as I'm live right now with you guys. You know, these resistance areas are going to be the key levels to watch on the chart, in my opinion. So this yellow line is going to be the first major area of resistance for Bitcoin, in my opinion. If we are able to clear it, we might be in the game to get a little bit higher, back up towards this green box. That would be ideal. This would be the next heavy area of resistance for me, in my opinion. We've already set a triple top over here, so maybe we kind of get a deviation and then come back down. If we do come back down, if we do have enough strength somehow and we've just kind of managed to get it right here, then yeah, I would say that the key level to break is going to be that 28.6 level. And if we are able to break 28.6 and we just zoom out a little bit more, then yeah, I think we're just off to the races. We're going right back up to the prior high, you know, the trend high right here. And of course, if we've got that much strength, I think we would break it as well. But that's way too far. I just don't think we're that bullish yet. We have a lot of resistance right now in the short-term trend, and I definitely think that it's going to be posing some sort of problem for Bitcoin right here. So seeing that Ichimoku cloud continues to come down and Bitcoin just inching towards that resistance level while it's in quite a bearish place is definitely concerning. Seeing that the dollar from just what I can see right now, doesn't have any resistance really. You know, I think the key, we can see this, right? The way we identify these resistance levels is just looking at like, where does the price reverse? And you know, one key level is going to be right here. There's a very clear reversal that happened here. Let's just kind of draw the reversal. So there was a reversal here. Here we're getting some reversals here, another one across this red line. So yeah, this red line has some significance to it. We've got some resistance here as well, so I think it's definitely worth drawing this red line to represent a little bit of resistance up at 105. But the key big reversals have clearly happened in this green box, okay, and that's going to be about like 105.5. So that's what I'd be looking at, kind of like up here for a little bit of resistance, or up here. But for now, pardon me, the dollar, you know, from my view, it just has every reason to keep going up right now, you know, which could potentially result in yeah, just a little bit of pressure, a little bit more pressure coming onto Bitcoin. So for me, it's going to be these support areas. We've got this local low at 25.8. As long as we can hold it, you know, we're still just kind of forming a continuation pattern that's bearish in my opinion. There's nothing that will make this bullish other than reclaiming some of these levels. Maybe we can get above the yellow line, come up here, retest, and then move up. That would be, you know, the kind of setup that gives Bitcoin enough strength. If we get the retest, if we reclaim resistance and then use it as support, that would go a really long way in showing us that actually this market might have a bit of strength behind it. But for right now, we're just kind of retesting resistance levels, which is one of the more bearish things you can do, right? So you take that as you will, but that's just what I'm seeing in this market right here. Let's go ahead and take a very quick look at Bitcoin's dominance right here as well. And we are still holding very strong here. Ethereum against Bitcoin is gaining a little bit of strength, but it's right at a big area of resistance. So this sounds like something I should be covering on the daily channel. So go ahead and check that video out, which I'll record right after this one on this link right here, top link in the description. And while you are down there, like I said, if you do want to sign up to the exchanges available, the top 2 or 3 are going to be the main ones that I'm using, including OKX. To be fair, I also trade on OKX, but if you do want to check out these top 2, these are going to be the ones with the best offers. You've got no KYC and access to many markets, so that's a great option for you to consider. And Bybit as well, with up to $30,000 in free money for you to trade with. That is very cool. I mean, that is just free money you can deploy into the market to just accelerate. You know, I was talking about time, right? Like if you lose money, you're winding the clock back. Bybit allows you to wind that clock forward, which is actually really cool because they just give you more money to trade with, and that means, you know, more profits can be generated. So well worth considering. All right, guys, I really hope you have enjoyed this one though. If you have, you know exactly what to do. Make sure you do smash up the like, subscribe, tick the bell, and all that good stuff, and I'll see you all in the very next video. Cheers.